Mortgage Weekly Live for Thursday, July 28th, as we complete our series today on what I can and can't do with transferring or renewing my mortgage. We're looking into renewals month, transferring month for mortgages.
Mhm.
Sam, great to have you on the show today as well.
Yeah, thanks for having me. It's been a really good month, covering off a lot of good information, some things to know, because again, it's really easy to get the mortgage in a certain sense, but then sometimes you don't really know what to do as you get close to that maturity date. So I think we've covered off, a lot of good information, and we're capping it off on episode 90, which is also really exciting.
Episode 90 is right, Sam. Yes, it's been great to get through these 90 episodes. We've covered a lot of content and looking forward to completing this month. We've talked a lot about transferring, renewing your mortgage, and today's show is going to have a lot of good information that we're going to be chatting about.
Mhm.
Some of the do's and don'ts, can'ts and cans. So let's get right into it.
Yeah, sounds good.
All right. So the first thing we want to do is look at, can you move your mortgage without paying any costs to a new lender? That's a question that we get quite often
Mhm.
here at the office when a client does call in. They want the better rate, but they're really concerned. Is it going to cost me anything?
Yeah, exactly. And it really depends on when you have the change taking place, when you're having that transfer, or if you're waiting for that renewal date, which is the ideal scenario for, a lot of clients. If you're happy, with going all the way until your maturity date, then you can do a transfer or a switch without having any, penalties or discharge fees for ending the term early.
Yes, and that's always a great place to be, waiting till your maturity date and doing it
Mhm.
right then, and just having all planned and ready to go with your mortgage professional. So it all transfers on that date. And another good thing that a lot of clients can be excited about is that when taking on a new mortgage at maturity date and transferring to a new lender, there's a lot of lenders that will actually waive or pay for appraisal fees, which can be a few $100s right there,
Mhm.
up to also legal fees, which can really save quite a substantial amount of money when looking at a transfer and making it just an extra good deal to take on that new mortgage company.
Yeah, absolutely.
Yeah, so that's the first thing, and that's the thing that you can do, and that you can move your mortgage without paying any costs.
Hmm.
Now, when you move your mortgage to a new mortgage company on a renewal and transfer it over, Sam, another question we get asked quite often is,
Hmm.
can we take out any equity? Say a client's looking at taking out, say, $100,000 of equity. Well, that becomes a little bit complicated, doesn't it?
Yeah, that's right. I mean, it would be, great to just do that straight transfer, switch to a new lender, take out as much equity as you want, but you actually can't really take out more than 100,000 on a transfer, because then the lender, once it reaches a certain amount of equity or a certain amount that you're taking extra, it's going to change the deal structure to be a transfer and turn it into a refinance, which could have, different terms, different rates, and things like that.
You're absolutely correct, Sam, and that is a really key feature to determine when you're getting your renewal done. Is the bank classifying it as a transfer or as a refinance?
Mhm.
So that's something you can't do. Is you can't take out 100,000 when transferring your new mortgage to a new mortgage company. But let's take a look
Mhm.
at number three. Taking up to $3,000 on a transfer. Now that's a little different.
Yeah, exactly. You're not limited to taking nothing on your transfer, but you can take usually up to $3,000. And a lot of clients that we see doing this, it does help cover things like legal fees to process the transfer. Maybe again, the lender you're switching to isn't waiving those fees. You can take up some money to cover those closing costs and legal fees, so that again, be waited till the maturity date. You could do it. Taking some of those funds out, so you don't have to pay up front for all of those processing and transfer fees.
That's a good point, Sam. Yes. And if the new mortgage company is giving you an extra special deal where they're covering your legal fees and your appraisal fees, then you can actually use that money to actually pay down a little bit of debt or for some other purpose. And we can talk about that. Just make sure you call us and we can schedule a time to talk about those details because they can be unique to you. Number 4. So that's something, getting back to that, you can take up to $3,000 on a transfer and add it to your mortgage. So number 4, can or can't you save on legal and appraisal fees? We did talk a little bit about this. I think we let the cat out of the bag. but yes, go ahead.
Yeah, yes, you absolutely can. Again, typically we see if it is a transfer and a switch, the lender often does cover a lot of these things. And that's where a transfer is a bit different from a refinance. We see that, usually in the case of a refinance, we don't see too many lenders, covering legal or appraisal. If they have a special promotion, maybe. But this is typically something that's more commonly offered on the transfer of a mortgage. So this is another tip where you can save on those legal and appraisal fees because, again, on a transfer, many lenders will waive or cover those costs.
Great point, Sam. And let's go into the last one there. And before we just move on, you can save on legal and appraisal fees, as Sam was saying there. So the last thing, can or can't you keep your insurable status if your loan was insured through CMHC or Genworth, Sagan, or Canada Guarantee? And that would be yes, because if your loan was insured and you transfer that loan over to a new mortgage company, then you're actually not taking out any extra substantial amount of funds, and that loan will actually maintain its insurable status, which does provide you as a client with some fringe benefits, and it depends really on your insurer, but there are some benefits when holding an insured mortgage. And make sure you contact us or your preferred mortgage provider to talk to them about what benefits you have when you have a mortgage insured through CMHC, because those insurance costs can add up quite substantially to your mortgage.
Yeah, absolutely they can. Yeah, but again, there is, depending on the insurer that is insuring your mortgage, but you do have a bit of peace of mind in some of those ways when you do get to keep that insurable status with the lenders.
You bet. Well, Sam, that was great. We've covered 5 can or can'ts with transferring your mortgage when you're renewing your mortgage. Now, a lot of folks, most mortgages are broken within year 3.5 out of 5 based on statistics. So you might be wanting to transfer your mortgage early or even refinance. So make sure you contact Sam or myself or Terry Lynn, and we can get started with a customized overview of your mortgage situation. In the meantime, thanks Sam Thompson for joining us today. He's a mortgage agent out of the Barrie area, originally from Ottawa, Ontario, with our team now for just over 2 years. 2.5 years almost now. So it's great having you on the show. Sam, always great to have your expertise here today.
Yeah, thanks for having me on the show this morning, Joe. We're finishing off episode 90, and it's always good to be on with you yourself. Almost up to 12 years in the industry, living up in Aurelia, and bringing a lot of insight to a lot of these points. I find that over the past 90 episodes, there's definitely been topics that I'm not super well versed at, but I feel like you're really no stranger to any of the topics we've covered. So thanks again for having me on the episode today.
Thanks very much, Sam, as well, for that wonderful introduction. And for all of you who are our viewers here on Canadian Mortgage Weekly Live, we are excited to share with you that we are starting Renovation Month next month in August. And we're going to be covering all things related to renovations and mortgages. And Sam, next month, we're going to get right into 5 ways to finance your renovations. And we got a lot of great content planned for you.
Yeah, that's right.
Yeah. So join us next week. And thanks for watching Canadian Mortgage Weekly Live, Canada's only video mortgage weekly news podcast. And thanks for all your loyal viewership. And if you have any questions or would like to suggest a video, drop a comment below or send us a private message. And we'll see you next time.